Welcome back to the channel. Today we're going to have a look through my trading 2-2 portfolio to see how it's been performing. So one thing that I just want to mention before I get started is I think that it's really important to always remember why it is you're actually investing. What is it that you're trying to achieve and what actually is your ultimate goal? So I started this channel at the beginning of 2021. It was the second or third lockdown, I can't remember. Who can even keep up? And I started this channel to change my life. So alongside investing, I want to use this channel and my investing strategy to actually change my life. So I'm one of those people who has taken a completely different perspective on life over the last couple of years. The last 2 years have made me really appreciate that actually you've only got one life and you better make sure you make the most of it, because before you know it, it's gone, and in a couple of generations no one will ever know that you even existed, I'm afraid. So this is not meant to be a depressing message, actually quite the opposite. That realization has made me personally want to absolutely max out the time that I do have, do what I want to do, be as happy and healthy and wealthy as I possibly can, and actually as well make a change in the world. So that's what I'm trying to do with my life. So in my professional life, I work in sustainability and I work on some amazing projects that have significantly actually reduced carbon dioxide emissions into the environment. And in my family life, I'm very lucky to have a happy and healthy little family, with the addition of a little kitten actually in the last week. So I'm happy, I'm healthy relatively, and I'm doing what I can at work. So what's left? Wealth. And this YouTube and investing journey for me is to quite simply make me wealthy. So for me, that simply looks like financial security, financial independence, whatever you want to call it. But basically that means to me never having to worry about money and using money to enable me to support the lifestyle I want for me and my family, for this generation, and actually for the next as well. It's that simple. So with that in mind, I'm looking to try and max out my ISA contributions every year across a broad and diverse set of assets. And this financial year, I'm holding my stocks and shares ISA through trading 2-2. So in April, I transferred my trading 2-2 general invest holdings and all the cash that I had into my trading 2-2 ISA. So bear in mind, in order to do this, you have to sell and rebuy your shares. So you have to sell all your shares in your general invest account, transfer the money across, and then rebuy them in your ISA. So it's a bit of a pain, as there's no facility to actually directly transfer these holdings across, but it's just something that you need to do. So this also means that your returns are skewed when you look at them. So at the time I transferred, I was already 1,500 quid up on my investments. That means when I sold and rebought in the ISA, it then appears that I've actually got no gains at all up to that point. Just simply means whatever shows on my returns on the ISA, I need to add an additional 1,500 quid to get a true reflection. With that in mind, let's have a look through the account. So this is my trading 2-2 account. Account value at the moment is 12,736. My utilization of my ISA at the moment is 64%, so I've deposited 12,800 and I've got 7,100 before the 6th of April 2022. That leaves 4 more paydays to be able to contribute to this. And if I'm going to max out that ISA, it means I'm going to have to deposit about 1,800 quid a month in order to get this. So I'm not entirely sure whether I'm going to be able to do that, but I really do want to max this out. Might just mean a bit of a lean Christmas in the Neil Invests house. Here you can see it as a graph. So I obviously started in April because that's when the new financial year, and I've been depositing every month all along the way, and my returns haven't really significantly gone up in that time. It's been a bit of a turbulent year, there's no question about that, but 6% up on top. So 700 quid is 6% for this portfolio on top, as I mentioned, of the 1,500 quid before. That actually puts us at 2,200 pound up thereabouts. So on a £12,000 portfolio, that's around 19%, something like that. So not actually too bad. So within my trading 2-2 portfolio, I've got 4 separate pies. As you can see, I've got dividend, I've got funds, I've got grow, and I've got new car. So within the dividend pie, the holdings that I hold within here, the idea of these holdings is to cover the world geographically, and actually to cover the world by sector. We've got pharma, we've got tech, we've got finance, we've got REITs, we've got consumer goods, we've got banking, got insurance, we've got everything covered within here. And looking at these businesses, as you can see, these are all massive big blue chip businesses. A couple of UK businesses in there. I've also got Aviva in my HL account, but obviously this is a trading 2-2 specific video, so we're not going to cover that. But within these holdings, I'm really comfortable with all of them. I haven't added anything into here since I started this portfolio. I'm really comfortable with it. It's ticking over nicely. The returns on there at the moment, 12% up within this portfolio across those holdings. And I just want to drip into them, want to continue to drip into them as much as I can. Even when I start my new ISA next year with a different broker, I will be moving broker next year. I'm a little bit concerned at the lack of transparency of trading 2-2 at the moment, so I'm going to be using someone new next year. probably going to continue with the exact same holdings that I have here. So we've got Microsoft, we've got Apple, Realty Income, Johnson & Johnson, 3M. Actually, that's the worst performing one. Oh no, it's not. Visa. That's the worst performing one. We know why that's the worst performing one, because basically Amazon have cut their ties with Visa for UK selling. So it's only UK selling. So it's not actually the total Amazon market throughout the world. It's just UK, but it has taken a bit of a pacing because of that. Could it be a sign of things to come, or could it actually mean that it's just a blip and it's a buying opportunity? I'm keeping my eye on that one because I'm not 100% sure about Visa, what it's going to actually do. So Legal in General is one that I doubled down on recently. I've got a video, I'm going to put a link to it here as to why I've done that. I'm really bullish on this business. I think it's going to give great returns over my time period. So my time period is decades. It's not months, it's decades. I think that could really snowball and give some really pretty tasty returns. Second pie I have is my funds pie. So looking at this, what are we, 2.4% up? Not massive returns on this, and that is just reflective of the year that we've had. So bought all of these funds back in April, haven't changed anything here apart from dripping into them. And what we've got covered here is we've got S&P 500, so that's the whole of the US covered. We've got the Ftse all world, so that's the whole world, obviously, top businesses across the world. We've got emerging markets, we've got the Ftse 250. Now I wanted to get the Ftse 250 because I've got the Ftse 100 covered within my HL portfolio. So the 250 is the 250 next biggest businesses within the UK. So there are smaller cap businesses, mid to small cap businesses, but that means obviously they've got the potential for significantly more growth, but they have a downside as well that's significantly larger. It tends to be whatever the Ftse 100 does, the Ftse 250 will do that and some. And I've got an iShares biotech fund as well at the end here, because I think that biotech is going to be massive over the next couple of decades. I think that they're going to get some really good returns in that. So the next pie that I have is my grow pie. This is the only pie that's in the red. It's only just in the red, 0.5%. That's the volatility of growth businesses, I'm afraid. So when we look at the holdings, Alphabet, wouldn't be happy with that. I bought Alphabet with the cash that I relinquished from AT&T. So I sold AT&T with the dividend cut. I think it was the beginning of this, no, it was a few months into this year. There was a dividend cut. It didn't work within my strategy anymore. They fundamentally changed the business. They split it in half. They changed the way that they're going to be able to generate revenue in the future. For me, it was an easy decision. Sold out of that. I think AT&T has gone back since then, actually. I need to check that. But my investment into Google has increased by 25%. Amazon, you're going to get 10%. You're going to get more than 10% a year off Amazon. It's as simple as that, as far as I'm concerned. The way that they're operating their business, they're taking over the world. You are going to get 10% in there. So it's a growth business that I'm always happy to hold at the time being. Disney, mixed opinions on this. Yes, they have had a bad 6 months and we're down 18% in that now. But I think it will bounce back. I have no concerns within Disney for the long term, for 20 years. The brand is too strong. They're continuing to get subscribers with their online, with their Disney Plus, not as much maybe as they would have hoped, but it's continuing to grow, and they're going to drive revenue. They are going to drive revenue upwards every year. I really do believe that, so I'm confident with that. PayPal down a lot as well, 25% down. I only have a smallish position in that, so that's about 50 quid down. So no concerns for me there. Netflix just short of 24% up with that, so 70 quid up on that. That's another one I'm just going to hold for a very long time unless things change. Rolls-Royce doing well. It's slowed down in terms of its growth recently, probably, and what are we, 23% up, just thereabouts now. Still continues to do all the things that I want it to do. It's continuing to invest into all sorts of different areas. We'll do a Rolls-Royce video update soon, actually, because there's some pretty exciting news. And then Virgin Galactic, 25% down. Just every time I open my account, it just seems to be further and further down. I was 100% up in this 4 or 5 months ago. So it has fallen off a cliff. Now it's going to be down for a while. So if you're expecting some significant returns from this business, you're going to invest in it and want some returns inside weeks or months. That ain't going to happen. It's going to take a while to return some value now, simply because things have gone back. Tesla have gone back. However, they're starting to sell tickets again. They're starting to sell a lot of tickets. As soon as they come available, they're sold out immediately. So I do have confidence in the long term for that. We all know why. I've covered that enough time. And then the last one is my new car pie. And this one is 13% up. Within here, what the plan is, I've got 600 quid in here, is to invest into this so that it grows. And in 6-7 years, there's enough to buy me a new car. Right, I'm not talking about a brand new car, I'm talking about a second-hand car. That's what I do. So if you look at the businesses in here, some of them are all over the place, some a lot up, some a lot down, some volatility and some funds as well. But the idea being here that it's better than saving up to buy a car. Let's invest the money to buy a car. So it's a lot shorter time frame that I'm talking about versus some of the other pies, because those are going to be holding for decades. This one I'm going to be holding for a few years in order to try and just save a bit of cash to buy a car. So in here I've got Tesla, 65% up. I've got Global Clean Energy, which is 4% up. That's had a tough year. Uber, which has just fallen through the floor, 28% down on that now. I am. iShares automation and robotics. I see a great future for that. That's a really easy way to get into robotics as far as I'm concerned. I don't know what robotics businesses are going to do well. Buy a fund, simple as that. And the iShares EV fund as well, because again, there's some great growth within EV vehicle businesses. Some of them are going to crash and burn though, so this way I'm covered. So those are my 4 pies within Trading 212. Now I also do like dividend businesses, as you will have seen here. So I'm going to put a video here where you can watch, where you can look at 5 dividend companies that I think are going to do well in 2022.